Let us experience the concept that you learned in lesson 22 in today's HLQ zone analysis video. That is the lower time frame zone as an horizon to the higher time frame zone. A powerful concept I developed and I explained in our training course at lesson 22. I am Pratap here. Today is 3rd January 2025. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's end of the day report. Even before that, all of you please understand, we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is over $8,000 and I am providing this complete free training. And you can access all the training lessons at our NeoStock YouTube channel. At our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to this particular post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be useful to you. Now let's get into the evaluation of the high liquidity zones. Let us evaluate. Yesterday, end of the day report, we identified 9 high liquidity zones from daily and 75 minutes time frames. The first one is Sona forgings. This is a drop base drop identified by our software. This is a 75 minutes high liquidity zone. And this 75 minute zone is not having a proper fine-tuned 5-minute zone. It doesn't have a proper structure regarding the 5-minute zone. If at all, if you want to consider, some extent you can consider this drop base drop, but this is already tested zone. You can draw a zone like this. 125, 75 minutes, this is 15 minutes fine-tuned supply zone. Inside this 15 minutes fine-tuned supply zone, you can identify a fine-tuned 5-minute zone. Not a very great supply zone, but okay, you can consider. So this is at the distal line of the proximal line of the zone. This is drop base drop. And this zone is already tested. See, it picked up the orders from this zone. Prices went and then couple of times the zone, even 3 times the same day continuously. For some time prices, after that prices came down sharply. Because it is a tested zone, now we can't plan any trade in that. See today, this fine-tuned 5-minute zone is violated because it is not a fresh zone. In case if you want to fine-tune in this zone, this is the only option you have. Anyway, I am deleting. This is because it is already tested. Our focus is the one we are planning. Go to the 5 minutes time frame. Now we are currently in the 5 minutes time frame. Here you see. Here you have a drop candle, failed ERC candle as a drop. You have a base candle and then you have a drop candle. This 5-minute zone is the horizon to this entire 75 minutes high liquidity zone. Lesson 22 you learned. Lower time frame zones as an horizon to the higher time frame zones. This drop is the failed ERC as a leg-in. You have a base and then you have a drop. And after that it is the first time it is tested, second time it is tested, and then this entire leg out formation of the 75-minute zone is completed here. It picked up the orders and then the whole down move started. See what happened today. Today prices entered into the zone at what time it went? At morning 9:35 candle. Even 9:36 candle, 9:45 minutes candle also it tested. Prices came a little. Now once again it is tested in case if anybody missed. Now you should not have missed this opportunity at 10 o'clock. And after that see how sharply prices came, and finally at 12 o'clock 25 minutes it reached the 15 minutes target. Here we have a 15-minute zone. We have a rally base rally. Okay, further this is violated and further moved up. Maybe this drop base rally has been, the next target also it reached. Maybe if anybody used a trailing stop loss and aimed for more targets, you would have got even more, some more extra profit you would have got. But anyway, this itself is a very big profit from here to here. How much profit it has given? Sona Comps, this is nothing but Sona Forgings. It has given 10,036 rupees profit, which is 10.1% ROA it has given. Excellent profit. Next one is CESC. This is also 75 minutes high liquidity supply zone. Look into this zone. This is a rally base drop. And this is having a 15 minutes fine-tuned zone here. We have a drop, two base candles and a drop candle, the 15-minute zone. But 5-minute structure is not good. Go to the 5 minutes time frame. Look into the 5-minute structure. It's not a good structure because entire 15-minute zone. We have a drop, 1, 2, 3, 4, 5, 6, 7 base candles. Many times such kind of zones will be violated. And moreover, you can't draw such a big 5-minute zone. First of all, this candle is, we don't know whether this is because of freak trade this candle is opened here or really it is opened. You may not be knowing properly. Go to 1 minute, you get clarity. 1 minute time frame. This is the morning 9:15 candle. We have a drop, we have a drop. Definitely, this is not a, see here, this entire thing is a consolidation here. Because 5 minutes candles are there here. So what happened, many times such kind of zones will be easily violated. See what happened today. Morning easily this entire zone is violated, and from where it picked up the orders. Go to the 5 minutes time frame. You have a lesson 22 concept. Lower time frame zone as an horizon to the higher time frame. This is the concept. You have a rally base. Rally base drop. And it picked up the orders from this zone. And prices came down, and then this entire flow started moving down by picking the orders from this 5 minute zone as an horizon to this entire 75 minutes high liquidity zone. Previous trade is also exactly the same way. See how this lesson 22 concept, how powerful it is. See today morning prices entered into the zone and then sharply came down and finally reached the target. At 2 o'clock 15 minutes it reached the target. And then when it gave the trade, morning 9:20 candle. So this is another powerful concept. Lesson 22. The lower time frame zone as an horizon to the higher time frame zone. A very powerful concept. I did a lot of research in developing this concept. Because people are not aware of this concept, institutions may not be having a much focus on this concept. Currently we are getting huge success. If in the coming years more and more people learn this concept, institutions also come to know more people are using this concept. At that time they will also use some techniques to trap us. But until then we will enjoy our profits. So CES is another. How much profit CES has given? CESC has given 14,420 rupees profit, which is a 10.8% ROI. The 5-minute zone as an horizon to the 75 minutes high liquidity zone. Next, another interesting, and moreover it is a shocking. Lot of surprises are there in the next stock we are going to discuss, that is MCX. Why lot of surprises? You will see. First of all, this stock is identified as a stocks near 75 minutes demand zone. Where is that 75 minutes demand zone? We have a rally base drop. Not only that, this stock is this stock is also having a daily high liquidity zone. Go to the daily time frame, the daily demand zone. Rally base rally. This daily demand zone is having a LTF zone as an horizon to this entire daily. Go to the 75 minutes time frame. See this 75 minutes, rally base rally. This 75 minute zone is an horizon to this daily zone. And this 75 minute zone is also a high liquidity zone. I don't know how many of you attended January 1st HLQ zone analysis video. January 1st. Look into the Excel sheet. On 1st January, 1st January we discussed MCX. First January. So if you look into the 1st January video, I have clearly explained this, how I fine-tuned this data, how we identified the order flows, and in this order flow on 1st January we got the trade. And also here this is LTF zone. This 5-minute zone is an LTF zone to this entire daily zone. This 5-minute zone, daily zone picked up the orders from this area and moved up. This is also we discussed on the 1st January. Let me go to the directly 5 minutes time frame. So here I have drawn this 5-minute zone. Drop 3 base candles and a rally candle. And again it came down, picked up the orders, moved up. And then this is the daily high liquidity zone. This entire big zone is a daily high liquidity zone. And again prices came down, picked up the orders from this 5-minute zone. Drop, base, rally, 5-minute zone. This 5 minutes is a fine-tuned zone. We have a 15-minute zone. This is a fine-tuned 5-minute zone inside this 75 minutes high liquidity zone. And this entire 75 minute zone is a horizon to this entire daily zone. Of course, this fine-tuned 5-minute zone inside this 75 minute zone is also a lower time frame zone, horizon to this entire daily zone. And this zone, this 5 minutes horizon, I explained on 1st January. Okay, why we are discussing today? Okay, I will come back to this point after few minutes. First of all, how our software identified this zone today? stocks near the 75-minute supply zone. So let's focus first on that. I'm going to the 75 minutes time frame. I'll come back to the demand zone later. Okay, according to our software, this rally base drop, this 75-minute zone is identified. This 75-minute zone is fine-tuned with 15 minutes time frame. Here we have two 15-minute zones. We have a rally base drop and follow through candles. This is a fine-tuned 15-minute zone. And also we have one more fine-tuned 15-minute zone at the distal line of the 75-minute zone. See, this is the 75-minute zone. At this distal line, you have a drop, two base candles and a drop candle. What is this? This 15-minute zone is an horizon to this 75 minutes high liquidity zone. Okay, again this horizon also we need to fine tune, and even this 15 minutes also we need to fine tune. Now go to the 5 minutes time frame. In this 5 minutes time frame, we have a drop candle, three base candles and a drop candle. Drop, base, drop. Okay, this is the fine-tuned 5-minute zone. At the proximal line of this 15 minutes fine-tuned zone. See, this is the 75-minute zone, this entire zone, and this one is 15 minutes. Now, this drop, three base candles and drop. Okay. And what about this 15-minute zone horizon? This 15-minute zone is the horizon for this entire 75 minutes high liquidity zone. And this horizon is having again a drop, base, drop. This is the fine-tuned 5-minute zone inside the 15-minute zone, which is the horizon. Now, this fine-tuned 5-minute zone is also an horizon. It is already tested earlier, and now this time the high again picked up the orders, and this entire 75 minutes high liquidity zone is created. See the price movement. Once it touched this zone and how sharply prices came down. Okay, but this horizon, if you want to take a trade, this one has to be violated. And today we did not get the trade from this horizon. Prices did not reach this level. But today, prices reached this zone. And this zone is pierced. What is this blue color line? This is the stop buffer. And look into the trade today. See? From this stop buffer area, price just sharply came down. See, came down, came down, came down, came down, came down. And finally, it touched the 5 minutes horizon to this entire daily zone. See here, this 5 minutes horizon we discussed on 1st January 2025 video. Please refer that video. See, sometimes listening the old videos, and if you draw in our charts, it will give you good trade opportunities. Today it gave a very good trade opportunity. This one. See, from this fine-tuned zone, from this stop buffer area, prices sharply came and reached the horizon, and then from this horizon, again prices started moving. People looks like MCX was like, it is like crashing like anything. See prices, how sharply it came down. People might be thinking, the stock is crashing, its price is crashing. It's going down. But who stopped this crash? The 5 minute zone as an horizon. The lesson 22 concept, what you learned. Lower time frame zone as an horizon to the higher time frame zone. I told it is a very powerful concept. Previously also we got many trades from this concept. Some of our subscribers, premium video subscribers, they earn good money from this, by using this concept. Such a powerful. Today also, you see, prices came, the crash is stopped, and after that prices moved and reached this 15 minutes target. Let me go to the 15 minutes time frame. See here, you have a drop, base, drop. This is the first 15 minutes candle, you got the entry. Next 15 minutes candle, it reached the target. How much time it took? Let me go to the 1 minute time frame, you get better clarity. You got the trade on this candle, first trade. If you missed again, another trade you got in this candle. Okay, anyway, first you got the opportunity at 11:41, and when it reached the target, 11:58. That means 17 minutes. In 17 minutes, the trade is completed. It gave you 6.1% ROI it has given. Okay, now you may ask a question. What about this short trade? How much profit it would have given? Because price moved from here to here. You might be having the curiosity to know, right? From this stop buffer area, again it came down up to this. How much profit it would have given? Actually, it didn't give profit. It gave you a loss. Your trade is stopped out. That's why I told MCX a lot of interesting things happened. But it looks like sharply it came down. Yes, before it came down, slightly it crossed the stop buffer. The moment the prices go a little above the stop buffer, what you do? You will exit the trade. You never know. The prices again turn and again it will come down. You may not be knowing that. Maybe if you would have extended this stop buffer further, maybe it could have been a very good trade for you. But generally what we do, we limit ourselves. Of course, this is stop buffer concept I clearly explained. Stop buffers, they are the minimum value. There is no rule that is the maximum. Please listen the stop buffer video once again. Whatever the stop buffer, that is the minimum value. If your risk is permitted, you can further extend the stop buffers. But not beyond 2%. Risk should not be beyond 2%. You should not ignore those fundamentals. Up to the stop buffer, I think 1.1% risk is there from this entry till this stop buffer. But anyway, we are for our performance of our HLQ zones, we are using the minimum stop buffer, that is the 3% whatever we are using, the 3% stop buffer, the 3% of the ATR, not 3% of this value. We are using 3% of ATR value. The 3% of ATR value only we are using for evaluating the performance of our high liquidity zone. See here. Now if I zoom, you will get clarity. See, this blue color line, slightly it moved. Slightly. See, this is a 6,400 rupees stock. And how much extra it moved up? 1 rupee 50 paisa. Just because of 1 rupee 50 paisa, we exited our trade. We have to, because we have to strictly follow the rules. It looks like we missed a great profit. Yes. That's why I told this. Many interesting things happened in this stock. People think in this stock we got a huge profit, but fine-tuned 5-minute zone is violated. From the stop buffer, 1.5 rupee moved. Okay, 6,500 stock, 1.5 means it is a very small. It is like 10 paisa in 100 rupees stock, equivalent, something like that. See, it's a very bad luck. We have to accept sometimes. There is no other option. Our profits will be within this blue color line. Either on this line or before this line only, we will accept. Once this blue color line is crossed, we have to consider it is a loss only. So that's why MCX has given, MCX trade is stopped out. But it is a very unlucky trade. A huge profit we missed just because prices went a little above the stop buffer value. Little above the 3% stop buffer value. Okay, how much loss it would have given from the entry to this still this stop buffer value? MCX has given a loss 1175 rupees. Sorry, it is not 1.1, it is 0.8%. Only less, even less than 1%. It is 0.8% loss it would have given. That's why I'm telling, somebody would have extended this line because the risk is very small. Some people can keep up to 1% level, some people accept up to 1.2%. They may extend their stop buffers. If anybody would have done like this, today you would have got a very good profit from this stock. But according to my HLQ zone analysis, performance point of view, it is a stopped out trade only. According to the standards I am following for evaluating the high liquidity zone performance, it is a stopped out trade. So that's why I have registered. The loss is 1175 rupees, which is 0.8% negative ROI as per one futures margin cost. But after that, interestingly, what happened? On first, if you would have listened, first January video, HLQ analysis video, you might have drawn these zones in your charts. This 5 minutes origin you would have drawn. This 5 minutes is the origin. This drop base rally is the origin for this entire daily zone. See the daily zone, a big zone. Let me go to the daily time frame. We have a drop base rally, the daily zone. For this daily zone, this 75-minute zone is the origin. This 75-minute zone is having a fine-tuned 5-minute zone. That fine-tuned 5-minute zone is also origin to this entire daily zone. And today prices entered into that area. The fine-tuned 5-minute zone to the 75 minutes high liquidity, which is the origin to the entire daily high liquidity zone. Okay, fine. It reached, it gave you a trade at what time? At 11:40 it gave you a trade. And when it reached the target, it reached at 11:55. In 15 minutes, the trade is completed. Actually, if you look into 1 minute candles, it took 19 minutes time. So within 20 minutes, it reached the target. And how much profit it has given? It has given 9,210 rupees profit, which is 6.1% ROI. Do anyone dare to take a trade in this candle? Suppose you are not aware of these concepts. Let me go to 75 minutes. See the 75 minutes candle. Sharply it came down. This is the first 75 minutes candle, 9:15 candle. The next 75, this is 10:30 candle. And when prices reached your 5 minutes horizon, this is a big red candle. It's a very big red candle. At the time you have to take an entry. Do you dare to take a trade? If you are not aware of this lesson 22 concept, lower time frame zone as an origin to the higher time frame, definitely you don't dare to take the trade. You may feel this zone will be violated. Further it will go. But does it happen? No. This zone again pushed the prices. How it pushed? Sharply it pushed the prices. Within 19 minutes, it reached the target. In 19 minutes, it gave you 6.1% ROI as per one futures margin cost. After that, the zone, after some time, the zone is violated. It is also having strong orders. That's why sometimes strongly it is a holding. After that, it is violated. So that is the power of the lower time frame zone as an origin to the higher time frame zone. That's why these important LTF zones, you have to keep them on your charts. You should not delete them. You should keep them. Next time when prices are entering, you have to plan your trade. In between any corporate actions, you need to adjust your charts accordingly. Like dividend adjustment and all we are using, right? At the time zones will be altered slightly. But otherwise, there will be reference. Because I kept this in my chart, Exactly, this is the area, because LTF zone, we have to plan your trade. Whether software is listed or not, because you have both the zones are there, high liquidity zones. This is a high liquidity demand zone and this is a high liquidity supply zone. Currently prices are moving in between. Definitely you can plan the trade on either side. Several times I told you. When you have two high liquidity zones opposite to each other, the demand and supply zones, you can look for opportunities in both the zones. And lower time frame zones, many times it will work. It works very well. Anytime in future prices are entering, it will give you trade opportunity. Whether software is listed or it doesn't list, it doesn't matter. Lesson 22 concept works very well. Only high liquidity fine-tuned zones, they are valid only for one day, next day. But lesson 22 concept is not a high liquidity concept. It is another, it is beyond the high liquidity zone concept. That's why that is a powerful concept. Previously you have seen Nifty also, how such kind of zones gave us a very good profits. See, today all the stocks, they are LTF zone as an horizon to the HTF zone. That concept only you trades only you got today. All the trades are such kind of trades. So this is about MCX. And there is one more trade we got, but we can't take the trade. That is Hindustan Petroleum. You can't take the trade. Why? Because Hindustan Petroleum we discussed yesterday. Yesterday we got a trade also. Hindustan Petroleum. Let's look into the Excel sheet. See, Hindustan Petroleum yesterday we got 2nd January. From where we got the trade? From this zone we got the trade. I am not explaining how we fine-tuned yesterday's video. I explained. Please listen. Yesterday we took a trade and this is fine-tuned 5-minute zone is slightly pierced. I told you yesterday this zone is no more valid. You can't plan any trades because this zone might be violated easily. That is what happened today. See this zone, because there is no order flow here. Just I want to tell you, I want to show you. That's why I kept this. Otherwise I would have deleted because it is a pierced zone. It's no more valid for today's trading point of view. Okay, now this 15-minute zone is also, anyway, it doesn't have any order flows now. This is a fine-tuned 15-minute zone is also violated. Okay, but we have drawn one more order flow. This is also we discussed yesterday. This rally base drop, this is a 15-minute zone. So this is a 5-minute zone. Let me go to 15 minutes time frame. Here we have a rally base drop. This 15-minute zone we fine-tuned with 5 minutes time frame. Here we have a 5-minute zone. Rally, 3 base candles and a drop candle. And this zone is already tested. Because it is tested, we didn't plan any trade in this zone. But today it gave a trade. Okay, sometimes it will happen. But you can't, just because of those exceptional scenarios, you can't take trades from the tested zone. See, previously the tested zone, today it is violated, right? We just deleted a zone here. Anyway, yesterday it slightly pierced. Even if it is not pierced, we would not have taken a trade in this zone. When we have a confirmation that this zone is a high liquidity zone, then only we take the trade. Otherwise we won't. If this is a high liquidity zone, we would have taken a trade. See, today prices again reached, maybe with some entry buffer. The trade would have executed and almost it reached the 15 minutes target. Actually, the reason is here we have a zone up to here. You may ask a question, why it didn't touch? Because here see the wick, a wick is there outside the zone. Maybe this wick might have been mixed with this candle in the 15 minutes time frame. But 5 minutes we got the clarity. Let me draw horizontal line. Sometimes why we need to observe from 5 minutes is like this. Now you see, exactly in this area. Previously also it picked up the orders from this. See, sharply this candle is moved up. That means some order flow is there here, strong order flow, and that order flow is coming from this candle, this base candle. See, again today from there only again started moving up. We feel like, okay, slightly it missed in reaching 15 minutes target. This is how we feel. But actually the 5 minutes candles, that is having the order flow, slightly came out of the zone, that is holding the prices, not moving down. Anyway, this is like it is achieving the target. Technically it achieved the target. But have we taken the trade? No, we didn't. Because it is a tested zone, it is no more a fresh zone. Taking a trade from this zone, there are higher chances to be violated. But today, it didn't happen. That's an exceptional scenario. Okay. Otherwise, this would have been another trade. If this is not tested, this could have been another successful trade for us. But we didn't plan the trade. Okay, now there is another stock that is violated today, that is Cholamandalam Finance. This is also a 75 minutes high liquidity supply zone. We have a drop, 3 base candles and a drop candle. See, today the zone is violated. Okay, it is having a fine-tuned 15-minute zone. Actually, while drawing also I have concern about, by seeing this entire price action, it looks like a lot of consolidation took place here, right? I was having some doubt in my mind while drawing this zone, but still we have order flows are here. Clearly we are seeing. Let me hide this drop big candle, you will get clarity. See, this is look like a rally candle. Next you have 3 base candles and then drop candle. A medium size legging, 3 base candles and a drop. But sometimes all these candles also would have been considered as base candle, base candle, base candle. It could be in between. Maybe it is a base or maybe it is a medium size leg candle. But we consider as a legging by seeing this drop. But whatever it is, this is at 15 minutes. But 5 minutes structure, you get clarity, better clarity. Really there is an order flow or not. So here we have a drop candle. You have 1, 2, 3 and 4 base candles, and then you have a drop candle and follow through candle. This zone looks very promising, excellent looking. Definitely we will be tempted to take a trade in this zone. But today unfortunately this is violated. It comes under 20% category of the zone violation. Because we know sometimes the zones will be violated, we have to accept. But rarely such kind of things will happen. Maybe demand is very strong, much stronger than the supply today. Why institutions added so much demand? Maybe we don't know the reasons. There could be other calculations, there could be some other news on the market, anything might be there, might influence. So that's why the 20% category, these kind of zones we should consider. So it is a violated zone. But MCX, you see, that is different. MCX narrowly we missed. Otherwise it could have been a very good short trade. But we have to accept. But this is not like that. This is a clear violation. You can't defend. There is a strong order flow. You can't. But MCX is not the case. Even though we took the stopped out trade, but that's a different situation. But this is a clear 20% category when a zone category of a nice zone but violated. Okay, so how much loss it has given? Cholamandalam Finance. Cholamandalam Finance has given 2,468 rupees loss, which is a 1.4% negative ROI. So these are the 2 stopped out trades, and telling MCX is a stopped out trade is really a painful for us. Cholamandalam Finance, happily we will accept. Okay, yes, it is violated. But accepting MCX is not really, it won't come from our heart. Because narrowly just crossed the stop buffer and then again it gave a good profit. But you would have exited your trade by this time. Because it hit your stop loss. Okay, apart from that, Atul we discussed yesterday. This is a daily high liquidity zone. Yesterday I explained. This is a daily high liquidity demand zone. Here we have seen a 1 minute high liquidity zone here. Today prices did not come. Next one is a Paytm. Paytm is also daily high liquidity demand zone. Rally, base, rally and follow through candles. This is what our software identified. This is 75 minutes demand zone, not daily, 75 minutes. Sorry for my mistake. This is like a rally candle, failed ERC as a rally candle. You have 1, 2, 3, 4, 5, 6 base candles and a rally candle. And this one is fine tuned with 15 minutes time frame. Here you have a 15 minute zone. You have a drop base rally. Why I have drawn this zone I will explain. But this is the actual drop base rally. This one is fine tuned with 5 minutes time frame. So here you have a rally, 2 base candles and a rally. But I adjusted the entry up to this 15 minutes proximal level. You can also draw a zone like this, but risk will increase. That's why I adjusted up to this 15 minutes proximal. If you have fear that you may miss the entry, you can draw up to the zone up to the high of this candle or close of this candle. And here you have seen a drop base rally. Because this zone is already tested, by seeing this rejection very almost from the proximal line. Not only that, see, have you noticed drop base rally? Or you can consider this also failed ERC candle drop as a leg in. You have a base and rally. When such kind of price action will take place? LOTL. Maybe this could be a high liquidity zone, this drop base rally. If this is a high liquidity zone, if it is having such kind of characteristics, we can plan an aggressive trade setup. Until this zone is violated, you can plan your trades here. Next time also prices came near to the zone and moved up. And now also drop base rally is created near the zone. Probably this is the area we have a strong order flow. So that's why this is an aggressive trade setup point of view I have drawn this. But remember, this is not a fine-tuned 5-minute zone. This is a 5-minute zone, maybe a high liquidity zone. Maybe, I'm saying maybe. Only with the 80% confidence level, not 100%. Okay. If you don't, because it is tested, if you don't want to take a risk, just keep it. Observe what is happening. At least study purpose, this zone will be useful to you. But here you have a fresh zone. And moreover, it is a fine-tuned 5-minute zone. But before prices wants to reach, before that, this has to be violated. This 5-minute zone has to be violated. Until then, you won't get trade opportunity in this fine-tuned 5-minute zone. Okay, next one is Apollo Hospitals. This is a 75 minutes high liquidity supply zone. Apollo Hospital is having a 15 minutes fine-tuned zone. We have a drop, 2 base candles and a drop candle, 15 minute zone. That 15-minute zone again fine-tuned with 5 minutes time frame. We have a drop, 2 base candles and a drop. This is the area. And a fresh zone. It's not yet tested. But prices are nearing to this zone and coming down. Again here coming down. Maybe a strong order flow might be there in this area. If that is the case, you should keep some entry buffer and plan your trade. But anyway, today prices did not enter into the zone. We didn't get trade opportunity. Next one is Balakrishna Industries. This is also a 75 minutes high liquidity supply zone. Rally base drop, but did you notice? There are no fine-tuned zones. But today prices entered and sharply came down. But you can't plan the trade because there is no fine-tuned 5-minute zone at all. Go to the 15 minutes time frame. The structure is not good. See here, this is a failed ERC candle as a drop, again another drop, no base candles. When there are no base candles, no order flow. At least to check whether there are any aggressive trade setup with some price action clue, even 5-minute structure is also not good. See here, this is the ERC candle, failed ERC candle. All these are all drop, base, drop, no base. This is a drop, rally, drop, rally, drop. The structure is not at all convenient. This is the one. So that's why we didn't plan. Actually, this zone has to be violated. So if it reached up to here and came down, means maybe some 1 minute order flow or some seconds wise order flows might be there. But anyway, not having interest on this stock at all because it has to be violated. Today also there are no new order flows are created here. And remaining all the stocks we discussed. So this is about the HLQ zone analysis. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.